Alright guys, welcome back to another video. I'm Evan Trades. Welcome back to another video of mine. I know it's been a while. If you guys are new to the channel, please consider hitting that subscribe button. I upload educational ICT concepts, education. I've been trading for 2.5 years already. I'm a profitable day trader with his concepts. I've gone payouts. I trade my own live capital now. I trade both, and so I help people learn how to get the proper education all here on my channel. So if you guys like the education, if you guys like what you hear, if you guys want to see more, please consider hitting that subscribe button if you're new. But if you guys are regulars and you guys are already subscribed, welcome back. I took a 3 month break, 2.5, 3 month break from trading and social media and posting content because, well, I just needed a little mental reset. I think it was good that I did because now I'm coming back harder than ever. I'm more motivated than ever. I think it's good that I took that little break because now I'm hungrier than ever, and I can't wait for the content that I have for you guys, education wise and just creative wise, to help you guys out. And we're gonna do some great things for my community. And speaking of community, real quick before we get in the video, if you want to join my free community, the link will be down in the description down below. It's completely free if you want to join the server. I'm always in there answering questions. A lot of segments in there and a lot of sections. You can talk to people, ask questions, upload your trades, any of that. So the link will be down below. But besides that, let's get back into the video. So today I'm going to be going over a question actually one of my community members asked. I'm going to put it right here on the screen. Scars said, do you think you can make a video about the best market conditions to trade in and when not to trade? Well, yes, this is a really good topic to go over because I believe for a person that's been trading for about 2.5 years, the one thing that I've learned is recognizing good conditions and recognizing bad conditions. Recognizing when it's a good environment to trade in and recognizing when it's a bad environment to trade in will save you literally so much money. And I believe it's top three reasons that literally keep you from being profitable to being profitable as a trader. So I think it's very important. And I'm going to be going over that today. So let's first go over the first part of his question. All right, so when looking for a trade, whenever I'm the first thing I'm really looking for is basically seeing if price is moving smoothly in my favor. So how do I identify if price is in good conditions and in tradable conditions? Because of course, as traders, of course, we always want to take the best setups. We always want to be following our rules and we want to be trading in the best conditions possible. Because if we trade in the best conditions possible, we have the most higher probable chance of winning that trade and being successful long term if we consistently do that. So right here I just have a drawn out example and then we'll look at some examples on the chart after. This is just for a more clear explanation for you guys. Okay, so here we have our drawing. All right, so the one number key thing that I want to see in a market that's moving super clear, super obvious to me, and really good conditions, I want to see displacement, right? I want to see displacement through highs and lows. Displacement through highs and lows automatically tells me that there's a dominant order flow in the market, especially on the higher time frame, right? I'm not looking for my bias on the 5 minute or the 15 minute. I mean, you can on the 15 minute or 30 minute, but for me, to be more comfortable in my bias for the overall trend of the market, I'm definitely going to look at the 4 hour, 1 hour, shoot, even the daily, but mainly just the 4 hour and the 1 hour. I'm looking for displacement, large engulfing candles, and above any swing highs, above any swing lows, you know, uh, large aggressive candles towards a direction, right? And I'm looking for displacement, right? What does displacement create? Displacement creates fair value gaps. And those imbalances in the market, it's basically telling us price is pushed up so aggressive that it left this imbalance in price. And that's giving us a sense of direction of where it wants to go. So just an example, right? Let's imagine this is the 4-hour. We have buy side resting above, right? And if you're familiar with, if you're a subscriber, previous subscriber, you probably know my model, right? I look for a retracement into a higher time frame PD array. I zoom down, I look for sell side swept. I look for sell side swept right here. And then I try to look for an SMT as well. SMT, sell side swept. And then I try to look for my signature reversal pattern, which would be a inverse fair value gap. I'll make it red so you guys know it's a bearish one, and then a change in the state. Typically that is my entry pattern right there. So this would be my entry trigger, right? I'm looking for an SMT, sell side swept, retracement into a higher time frame PD array, IFVG, and change the state. That's my entry trigger, and I usually enter long off the close of the change in the state towards whatever buy side levels are there. So this is technically what my setup looks like on my trades, but just so you guys know, so you guys don't get confused. Anyways, so I'm looking for clear displacement, right? So right now, let's imagine price coming back down. We tap into here, go higher. Okay, then we're coming back down, all right, to this fair value gap. So what I'm looking for is, if I'm bullish, I want to look for displacement higher if I want to notice that price is going to be clean, right? So price came back, bounced this on this fair value gap, came back up, came back down, and I'm being careful. I'm being careful right here because we could easily just dump lower, displace through this low, and just continue all the way lower. Or we could go higher from and create this market maker buy model as well. So we have to be careful. So what am I waiting for, right? I'm waiting for clean price action. I'm waiting for the market to tell me that we want to go in a certain direction. How do I identify that? Well, I just said it, displacement. So a clear displacement that I look for would basically be, look, we have our sell side swept following my model, right? We create another high, internal buy side swept, and something like this. We run through the IFVG, and then we have our change in the state. And then typically with a nice aggressive candle, we're going to leave a fair value gap right here. Those are probably the best confluences you could possibly see with everything aligning like this. Sell side swept, you have an SMT as well. Just imagine the SMT is there. Or yeah, I'll do sell side. Just imagine the SMT is there. And then whenever you see internal swept and you see an engulfing candle back higher like that or lower, and it leaves a fair value gap right there, plus the change in the state of delivery, this is basically the market showing its hand to you. It's telling you where it wants to go right in front of your face right now. It's telling you it wants to go to this buy side because price is delivering so fast and so aggressively that it's leaving an imbalance right here. And it might not even retrace back to it. This is why I don't even enter off, wait for the retracement to a fair value gap. Sometimes it might just go off and just go back to buy side like that. Or it might, retrace back to the fair value gap. And then we might get that move higher. But either way, that engulfing candle, that displacement that is left in the market is aggression. It's showing you that the market wants to go higher. And that is a clear sign of, it's a sign of confidence for me to take my trade and risk my capital on the line. All right, now I'm going to show you guys an example of what it would look like on the drawing right here. What it would look like, what I would not want to see. Pretty bad conditions. How do I recognize bad conditions? And I think you guys are going to like this one. All right, so let's say we're bullish again. We're looking to see this buy side level get met right here, right? But we're waiting for our entry. We're waiting for our entry model, right? IFVG and a change in the state. So the one thing, I only use one thing to determine basically for me to anticipate bad conditions, this is what I look for. So whenever two-sided PD arrays, both-sided PD arrays are getting invalidated. If I'm seeing bullish for value gaps getting ran through and bearish for value gaps getting ran through, you can basically anticipate that, there isn't a true direction in the market right now. If both-sided PD arrays aren't getting respected, then price is basically just chopping around because, let's say we have a bearish for value gap right here, right? So let's say we come back up, get our move back up. We create a for value gap right here. Put blue for bullish so you guys know. And then we come down here, we reject it again. I'll make it a little lower right here. We sweep it one more time. We have a bearish for value gap right here. And then we come back up again and retrace it. And you see we're just constantly disrespecting these PD arrays, right? We had the bullish one right here. So whenever we disrespect, we come back up to the bearish one, we run through the bullish one, we run through this bullish one again right here, come back down, sweep the low, then we come back up. Right here I'm being more careful because look, the market, we're just chopping around right here. On the chart, this would be a barcode pretty much. There's no clear direction. Like if we wanted, me being right here in price, if I were to take my entry, like right here or something, and had my stop at this low, I would have got stopped, right? If price is truly bullish, you would tell yourself, if we're bullish, we're gonna run through this fair value gap right here. This fair value gap, you shouldn't, if you truly have conviction in your trade, you should not be worried about fair value gaps that are in your way. Because if price is truly bullish, then it's going to run through that. It's going to signify that, its order flow is really bullish, and PD arrays, the opposite PD array won't have an effect on your trade. Now, if we're doing this, bouncing off of it, running through the bullish fair value gaps, this other fair value gap, then sweeping, then going back, disrespecting this bearish one, then, I'm a little more cautious. Look, I might be more patient. I might want to wait for another signified reversal, and it makes me step away. So whenever you see both-sided PD arrays getting invalidated, and it prevents you from seeing a true side of the market and where it wants to go. So whenever you start seeing that, you can anticipate bad conditions in the market, and it's better to be patient and just reevaluate where you're at, be patient, and simply wait for another clean setup. And instead, try not to catch these little micro trades, to these, oh, I saw this bullish for value gap get invalidated, I'm gonna short, and then, oh, I saw this bearish for value gap right here get invalidated, I'm a long again. No, just wait it out, because you're just gonna get chopped up, and it's not gonna be good for you. You're gonna blow your account. So let's go to some real examples, and I'll show you guys exactly what I'm talking about. So this right here is a clear example of, it might be over exaggeration, but the reason I'm showing you guys an over exaggeration is because I want you guys to get the point of what I'm talking about. So I'm gonna do replay right here. All right, so say you're at price, you're in price right here, right? Don't matter about the time, just focus on the price action. So let's say you have a fair value gap right here, you're watching price, you see price get ran through, like, all right, we could be bearish because, we just ran through these two fair value gaps. So, yeah, we could be bearish. We just swept this internal high. Yeah, cool. We might dump. No, we absolutely just run through these bearish fair value gaps again right here. I'll make them red so you guys obviously know the bias. All right. So we just ran through these bullish ones. Right? Like, yeah, we have to be. This is looking pretty bearish. No, we come back up. We invalidate these bearish ones. So at this point, you should be like, okay, I need to be careful on where what I do. I need to just step away. I need to be extra cautious because we just ran through both sided PD arrays. So that's a sign that price is going to chop, right? So let's see what price does or continues to do. And again, we just ran through 3 fair value gaps, bullish fair value gaps right here. At this point, you should not even be thinking about trading or placing a trade. So at this point, you just step away, do not trade at all. This is how you recognize bad conditions. Like running through both sided PD arrays. We come back up, run through these PD arrays, or come back down, run through these bullish ones, come back up, run through these bearish ones, and we just came back down and ran through these other bullish ones. And you need to look for true, clear displacement through lows, right? The closest thing we had to maybe seeing a continuation was off this high right here. And it did leave a fair value gap, but we see we fiddled around here and then ultimately failed. And we continue just dump lower, 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 and none of these held. So to be honest, you shouldn't have to wait till all the way over here, but whenever you see just the bearish and the bullish fair value gap get ran through, I mean that should be your key. Just like step away, like wait, zoom out, step away, wait till you see displacement, and wait for that continuation or whatever your model is, right? So that's the only thing that I use, guys, honestly, just to signify when I to see bad conditions. You can obviously tell if it's bad if you go on the 15-minute or the 1 hour, and if it looks like a barcode, and I'm without even looking, I'm pretty sure I can find it like this. If it looks like this, do not trade. Always look on the higher time frame if you're trying to see if conditions are good or bad or where order flow is going. If it looks like this, don't even think about trading. You probably shouldn't even be signing into your broker or your prop firm account. If the higher time frame looks like this, that would be the best thing to do. So yeah, just don't even think about doing that. So if it looks like a barcode, don't trade. If there's no displacement above any highs or lows, like right here, we came into this high, didn't displace above it. We rejected, came lower, came to this low, we rejected it, and then we had to move down and then higher. But still at this point, it's even chopping around a little bit right here in this range. So there's no clear displacement with continuation higher. So just remember, guys, just remember the 2 things. Look for displacement and look for if you're seeing a bullish and a bearish fair value gap both getting ran through and in the same range, then you just need to just step away and maybe even just get off for the day or for that session. So and let me show you guys, I have one more example for you guys. It's going to be what I typically want to see whenever I come into the market and I'm like, wow, we have good conditions. I'm going to show you guys some real examples so you guys know what to look for whenever you guys get into trading on the charts. All right, so guys, right here we have another example of the bad conditions that we were talking about, right? This is anyone who's been trading for even 3 months knows that this is just not clean price action. I mean, we're just going up and down, up and down, up and down. We're chopping around, disrespecting both sided PD arrays, like I said. So what are we looking for good conditions? Wait, what do we want to see? Well, we want to see displacement, like I said, right? So I want to see displacement towards a opposite or towards a direction to show me that, price wants to go there. So let me mark out sell side. I'll mark out buy side right here. All right. So we want to see displacement towards a direction. All right, we just swept sell side right here. We're looking for an engulfing candle towards direction. All right, we create an internal low or internal high. Boom, right there. Right around market close, we get an internal sweep. We got sell side swept right here, internal sweep. We got a change in the state of delivery, and I'm sure on the lower time frame there's a inverse right there. We go down to the 1 minute actually. Yeah, there's a You could probably find a cleaner one on the 2-minute. There we go. Ran through a 2-minute IFVG. And even on the 2-minute as well, we have a big ass fair value gap right here. And then voila, we have our fair value gap. Remember in the drawing what I was talking about, guys, the model that I'm looking for, we have a higher time frame key level, get tapped into, it's the sell side, gets swept. We have internal manipulation, which is internal sell side swept. We're looking for a change in the state of delivery, which would be right here. We're looking for the displacement candle up to show us where the market wants to go, the aggression. And we're looking for a change in the state, and the IFVG, which would be right here as well. So everything is aligning in price, right? We have our sell side swept, internal sell side swept or manipulation. We have our change in the state, IFVG. We have our displacement, and now price is looking really clean, right? Just about like 2 hours ago, it was looking terrible. I mean, just about 2 hours ago, we were just chopping around back and forth, back and forth, back and forth. Now we have some sort of liquidity swept. Now we waited for displacement, a huge engulfing candle. We have our change in the state. Now we can expect price to reach this buy side level. And the reason I chose this buy side level is because it's the one standing out the most, and within this range, it's the most obvious high, right? So now, whatever your trading model is, I mean, it can be waiting to tap this for value gap or, off the change in the state. But either way, if you can, whatever your entry model is, we can expect price to go to that high. And it looks to turns out we tap it, reject it really nice, and then we end up reaching that buy side level as well, creating a little market maker buy model right here towards buy side. And we ended up respecting, I mean, just look, guys, how precise price is. I mean, this is why my entry model is amazing. Look how we precisely tap this 2-minute IFVG, and then this change in the state. I mean, price is just so precise. It's so beautiful, and this is exactly what I look for. I mean, going into the day, I look for displacement, displacement above highs, displacement like in this example. It'd be, this is a swing high. We displace through. Absolutely displace through. How do you know we displaced through it? We created a huge ass fair value gap, right? We had our change in the state, which is for my entry model, IFVG. We ran through the opposite PD array, and we tapped back into it, and then we went towards buy side. So, and if you took this trade back into the fair value gap, I mean, it would have been still a 3RR trade. So it's very simple, guys. It's not that complex. Honestly, it's not that complex to be able to recognize bad conditions. I mean, there's multiple ways you can do it, but that's personally what I look for. I'm looking for displacement. I'm looking if, bearish and bullish PD arrays are getting invalidated, at the same time, because that helps me anticipate whether price is going to start to chop. And so, and this is what I look for if I'm looking for price to clear up. I'm looking for some form of sweep of liquidity or just higher time frame key level to get hit, and I'm basically waiting to see that reaction for displacement, the fair value gap, and a change in the state with a clear target. So that's basically it, guys. It's very good. It's been a while since I made the made a video, so I hope my explaining was a lot better. Getting back into routine, I hope it wasn't as chopped as I think it was, but yeah, I hope you guys really enjoyed. I just wanted to give you guys that quick lesson on what I do personally to identify good and bad conditions and when not to trade. So there were just simple two steps, two things on what I do. I hope you guys enjoyed. Please be sure, and I'm excited to run up the community with you guys. So thank you very much. I'll see you guys in the next one. Peace out.